What's up everybody, welcome back to Earn It, Save It, Invest It. In this video, I'm going to be breaking down why HIMS stock continues to go down even after the Novo deal. I'm also going to give a stock market update. We've kind of been going through this crash with the whole war in Iran, and then I'm also going to give an update to my $100,000 challenge. This is week 42. So if you can, please give me a like and subscribe. I really appreciate it. It helps so much. Just really quick, right? So why is HIMS going down? HIMS is down 8% on Friday, so it went down to $22. Everyone thought the squeeze right after the Novo deal, because it was so shorted, that it was just going to make all kinds of money. The Novo deal happened, it went up, and it went up to basically 70%, down 18% though since that high. And then 40% is where it's at since the Novo deal, which is basically exactly where it landed right after the deal. So that's very interesting. Really, nothing has happened. And Robinhood says, yeah, the shorts haven't gone anywhere. The shorts they've actually piled on. They've doubled down. Not doubled down, but they've continued to pile on. They didn't flinch. So interesting. That's an interesting thing. This is their numbers. $2.35 billion that they did in 2025. 59% year over year. And sorry if my microphone sounds different. I'm using straight camera because I've been having all kinds of technical issues. So 2.35 billion, 59% year over year. But the net income was only up 2% because they've been investing a lot into the business. Adjusted EBITDA went up 80%, operating cash flow up 20%, free cash flow down 70%, a lot of investing. Subscribers is 2.5 million, up 13%. And then they went up 28% on their monthly revenue per subscriber, and it's at $83. So they're forecasting 2.7 to 2.9 billion for 2026, which they can easily get if they have a monthly revenue of $90 times 2.5 million subscribers, which of course they're going to raise those subscribers, especially after the Novo deal. And again, this is what they're going against. This is what HIMS is having to go against. It's the whole market's going down. The whole market's going down, so HIMS is going to have to be extra special. Now again, they did the deal with Novo, but they also did one last year, so maybe, again, the shorts are just whatever. That they're piling on more and more. The war is not helping. That's what's causing the market to go down, so that's not going to help HIMS at all. Trump is balking at the idea of a truce, and then yet he's saying we're winding down operations. That does not make for clarity. So in the stock market update, I'm going to kind of go over what to expect with all this. Now, in the context of war, the stock market fears uncertainty more than the conflict itself. And that's what we have to remember, is that right now we don't know what's going to happen. Once we have a clearer vision of what's happening with the Strait, what's happening with Iran, what is going to be the longer term objective, because we don't even really know why we just jumped it. We don't know why we did this. So there's so many questions to be answered. Once that happens, it says, typical recovery is about 42 days. So, once we see some clarity, it'll be good. But this is where people are right now. This is where everyone is. We're almost there. We're almost jumping out the window. We're almost there. We're not down 32%. We're not even down 18% though. I don't know why it's green, but we're not even that. We're not there yet, right? And this is the market though. That's the market. This is the NASDAQ. Down almost 10%. That's a very key number. 10% in 51 days. 0% in 220 days. S&P 500 is down 7% in 51 days. 0% in 196 days. And then this is the Dow, down 9% in 37 days, 0% in 210 days. So the markets are all correcting. This is not a crash yet. As you can see, the bears, 52%. That's pretty big. That's significant. Historical average is 31, but we had a 1 year high of almost 62. So I said, dang. Look at this, 39, 35, 40, 52. Okay, we're high up there, but this is not as high as we've been before. So what's going on? And then also, as look at this. The bulls haven't really gone anywhere. The bulls are standing firm. It's the ones that are in the neutral who have really jumped over to the bearish side. So what does that really mean? So I kind of took a look at when that 61% hit, right? It was right here, 61%. And that was April 3rd. So I looked at February 27th to May 1st, and I actually labeled it wrong. I put April 27th, but this is February 27th to May 1st. Now, as you can see, what was it? Right around here is when this is when the worst of it was. So it's 61, 62%. But this was the beginning when we finally hit 52% minimum. And then this is where we finally left the 52%, right? So as you can see, right, we're at 51 and then it just went down to 44. You can see there, right? It was actually 60%, and then we're up in the 34, 42, 44. You can see how fast it can go. It can drop fast. So then I said, well, let me look at 2022. That must have been awful. Well, if you look at it, we didn't even hit 60%. We hit 60% right away for those tariffs. We hit it twice. We didn't hit 60% for the first half of 2022. We hit 52 right here. We hit 53. We hit 59, 52. All the underlines are over 52, which is what we're at right now. And I saw this week, this period, that's like about a month and a half or so from September 8th to October 20th. Wow, this is a lot. Just boom, boom, boom. It was just seemed bad. September 8th to October 20th, it was bad. The market had already started to drop even more so, right? The market was up here, but the market had dropped further, and as you can see, it's just not good, right? So we're right here at 52, and as you can see before us, it's been 30, 40. We have a potential to drop more. We really do. We're in extreme fear. And do I have it right here? Yeah. So we're in extreme fear. As you can see, a week ago we're in extreme fear. A month ago, fear, and a year ago, extreme fear. So the market's been pretty fearful in the last 365 days, right? You could say. And this is what I think is going to happen. I think we're going to go down another 7%. I think we have another 7%, and I think it's going to be pretty fast. I think it's going to happen within a week or two. 2 to 3 weeks. I don't want to say too fast. I do have a short on the market that's ending next week on Friday, which is what? That's the 27th. So it's a short position, but it's a small short position, but I took it. It's a call on SQQQ. SQQQ goes against the market, so I just have a call on it. And I just think it's going to do very well over the next 2 to 3 weeks. It ends here soon because I just think the market has a little bit ways to go, and I think it's going to go to 15. And the big reason is, if you look at the market, if you look at the charts, these are all 10% or more drops in the market. Typically when we fall, we will go past the previous ceiling of this, right? So this is where this one is, and we would have to go down from here all the way to here is a 15% drop. So that's what I think is going to happen. When you look at all of these, they typically, the 10% drops or more will go past the previous, right? Went past the previous. This one didn't. This one did. 2022 absolutely did. This one, of course, didn't. Was still under it. This one almost did, and then this one actually got very close to reaching. If not, it did reach this one, right? So again, I do believe this has another 7% or more for a 15% total loss in the market over the next couple weeks, and then the market's going to recover. We need clarity, as something's going to have to make this market recover and have some clarity. So we're going to find something, but that's just my opinion of what I think is going to happen coming up here. So last week, really, again, the U.S. market experienced its 4th consecutive week of losses, with major indexes, S&P 500, NASDAQ, falling roughly about 2%. Escalation of the war, again, this is just what I've just been talking about the whole time. The oil price and all that stuff, it's just not doing good. Collapsing hopes of Fed rate cuts. Basically, they say, look, we're keeping rates where they are, and people now don't even know if they're going to be cutting them at all. And these are not as high of rates as we had previously, but these are not as low of rates as we are used to. So the market and the economy is really wanting lower rates. And then we had some corporate scandals. If you don't know SMCI, Supermicrocomputer, I think it was their co-founder, co-CEO, or ex-founder, ex-CEO, someone, they were charged with smuggling NVIDIA chips into China, which doesn't help. S&P 500 technical, it broke the 200-day moving average. and then Tesla has an investigation on its autopilot feature. So that's just not helping the market. Next week's news. So this is going to be the 23rd to the 27th. Continued fallout of the Middle East, and then more economic, and then earnings, which again, I honestly don't think anything affects it more than the war is going to be the biggest thing. Geopolitical fallout and energy market, right? We have some economic health checks, the flash PMIs, consumer sentiment, and the Fed speeches, but I think all of this is not going to help the market. It can only hurt the market. Oops. And then retail and consumer earnings. Again, there's some earnings, but I don't think it's big enough to move the market. This is the earnings. There's nothing in here that I see. HIMS is actually my holdings, but I just don't think any of these can move the market in any way. We have Lucid, which is, Tesla competitor, I guess. There's just nothing out there really, right, that's going to compete. So my $100,000 stock market challenge, I'm on week 42. I'm at $7,661.30, which is horrible if you know what my goal is, but it's okay. I'm feeling positive because we're in a crash right now, and I told you I will deploy more cash in a crash. So HIMS is my top position right now. I'm barely 1% down total. My average cost is 22, so I have brought that down a little bit. And I have 62 shares, so I brought that up. I brought up my share count, and I lowered my cost a little bit. Then I have TQQQ, which I want to add more if this market continues to fall. Celsius, Meta, Amazon, Adobe, Nike, The Trade Desk, Salesforce SI, Fubo, Oddity, and Micron. Now, Fubo, as you can see, I sold, maybe if you saw, I used to have 260, and I sold 160, because I just don't believe in that. It's down 70%, and there's just other things I looked into. It hasn't reacted the way I thought it would with the Hulu deal, and I don't think there's any catalyst to send it up besides some earnings that they're going to have to announce something crazy. Other than that, I don't see anything that can bring it up, right? They're going to do a stock split, which typically will bring a stock down, because then people are going to be like, okay, I'm just going to start selling it there, and then it'll typically go down, actually. So I just don't believe in that. I believe in Fubo right now. And TQQQ, like I said, I'll buy more. It is a 3x leverage, so don't want to play too much with that. But if the market falls heavy enough, I will buy it because I do believe in TQQQ. And this is the transactions I made. I bought a little bit of Salesforce, $100 worth. I bought 4 shares of Celsius, which I'm going to make a video about why you should be buying Celsius. Bought it at $43 for $172, and then I sold those Fubo shares, 160 of them, for $183. I don't even know why I got a commission medal, probably because it's such a crappy stock. And then I put in $50, so I was down basically negative $38 for the week in terms of money in and out. And then this is my week 42. Like I said, I forgot to change this into red, but I'm actually down 5%, down 28% towards the goal. I'm up 4% since June 2nd, but I mean, that's nothing. That's almost a year. I'm 10 weeks away from a full year. I'm down 28% if you exclude the $50 deposits, right? So I'm down 28%, and I'm also down 28% versus the goal, which shows you these $50 deposits mean a lot, because I'm actually up 4%, and that's just crazy, right? And then I also did add those $300 total when I see market weakness, which I saw starting February 13th, and I started seeing a little bit of market weakness. I started to add a little bit more, which I'm going to add more right now. When stocks drop in price, it's like your grocery store going on sale. You buy more, right? This is what I'm going to do. Like I said, I'm going to actually put more money into this market right now because it's going down. This is how I think people need to think, because it's pretty vital that you buy things when they're on sale. You make the most money when things are on sale, not when things are at the top. Not to say that you can't make money and you shouldn't be buying when things are good, but this is why it's always good to be aware and be prepared so that you're not scared. If you're aware and prepared, you're not scared of these times. And if you are aware but not prepared, then you're upset. I've been there. I've been aware that these markets, that I can crash, and I wasn't prepared for it. Like, I didn't have money. It's not like I was hurting and I was unprepared, like, and I started selling. No, selling is just making the wrong move, but I was unprepared. Oh, please like and subscribe. I was unprepared in the sense of I just didn't have the cash ready to deploy. And so I was really upset. Now I do have a little bit of cash to deploy. I was a little bit more ready for this. I was setting it up, like, I have deployed some of my cash already in the last few weeks, but I do believe that a lot of these stocks that I have bought will go up tremendously over the next couple years. So I'm not worried about the next 6 months at all. I'm looking long term. Like I said, Fubo is one that was more definitely a, I'm drawing a blank, but that was more of a risk, right? That was more of a risk. And a speculative, there you go. It was a speculative stock where I was like, okay, I kind of playing around, and I played too much. I put too much of my equity, too much of my capital in there, and that's my fault. And that's again why my account isn't necessarily where it should be. But I'm gonna make up for it. I'm gonna be buying these stocks at cheap prices, like you should. And I keep looking over at this because, man, imagine that's how it was, right? For real. So anyway, give me a like and subscribe. I really appreciate everyone who's listening to this. I don't know exactly how it sounds, but appreciate everyone. Thank you for watching, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.